Have you found yourself overwhelmed by the amount of information that's available online when it comes to tax strategy and tax savings? In today's video, I'm going to be sharing with you some real practical steps that you can use in order to be able to create your own tax plan. Now, I'm not saying to fire your CPA or your wealth manager, financial advisor, anything like that. What I am saying is that I want you to have the skills and the questions in place so that when you see information online, you can evaluate it from the lens of how does this actually work for me? And if you have that understanding, you will be able to have way more productive conversations with your tax professional, with your wealth advisor, and even help you to start thinking about and get clarity about how to think about your finances throughout the year. My name is Lauren. I am a CPA. I've been in the industry for over 15 years and have helped clients save over $2 million in taxes. I'm confident that the information that we're going to talk about in this video today is going to be very beneficial. Now, I want to start off by saying that a lot of times the information that is shared online, it is starting with the tax plan. But in my world, how I work with clients, I believe that's the wrong place to start. If I were to build a house, I would start with the foundation. And before I even break ground, I'm starting with plans. A tax plan is a component. Think of it like the electrical or like the HVAC system in your house. The tax plan isn't the house. That's not what you're trying to build. What you're really trying to build is a financial fortress for you and your family. And so if we were to then say, let me just start with the tax plan, that's like not having blueprints for a house and just going into putting together the HVAC system. Doesn't make sense. So I believe that every strong, effective tax plan is rooted in a foundation of what is your overall financial goals. If we don't understand that, we cannot begin to craft a tax plan that actually is going to work for you. So what is even the purpose of a financial plan? I think a lot of times people think that, and maybe you have thought this, that a financial plan is just, oh, this is how I'm going to save my money and allocate my money so I can be able to retire and so I can leave something to my children. But I submit to you that a financial plan should do so much more than that. If the sum of everything we do in life is just to accumulate wealth, is that really a fulfilling life? I believe that we are created and designed to achieve a higher purpose, and that purpose is to be able to serve others. And service to others can come in all forms, shapes, sizes, you name your journey. So for me, the way that I believe that I was called to serve is through teaching and educating you. But you may feel called to serve because you want to support youth in sports, young entrepreneurs, whatever that looks like for you. That is really your heart's passion. And so having a financial plan should get you to purpose as quickly as possible. It's not about saving money. We can save money at any point in time. It is about getting you as quickly as possible to purpose. And so if we understand what purpose is, if we understand that our financial plan is to lead us to purpose, then everything we do should be related to purpose. When we are talking about a tax plan rooted in our financial plan, we are saying that my financial plan is to get me to opening my nonprofit 10 years from now. And that nonprofit is to provide housing for single moms. And I want to be able to house 60 families. I think I need about 10 years to be able to acquire the real estate, to cash flow off that real estate, to get into a position where that is all I'm doing. If that's the objective, then everything that we do downstream in regards to tax planning should support the overall financial plan. So I want to just make that clear because, as I said, we a lot of times start with tactics, but starting with tactics is not the place that we want to begin when we're talking about a tax plan. Once you have clarity on your financial plan, we now start the process of the tax plan. So what do I have to do? I need to assess where I'm starting from. And I think this is important because a lot of times people will come to me and say, hey, Lauren, I scheduled a consult with you because I just am getting killed on taxes. And that is the reason why they come. I'm paying too much, I'm paying too much, I'm paying too much. It is always that. And maybe some other things, but it's usually I'm paying too much in taxes. But we don't have any structure. I had a consult with a client recently who was making a significant amount of money, had a whole bunch of different things going on. They had businesses, real estate, had a full-time job, but they said to me in the conversation, I still don't really understand what's going on. So it's not about the accumulation of things that is the approach and the purpose. We want to make sure that everything is going back to that foundation. So when we're talking about the tax plan now, we've got to understand what is the lay of the land. We got to get a lay of the land in terms of what is our estimated tax bill for this year? How much do we anticipate that bill is going to be? But we've also got to get a lay of the land in terms of what do we have available to us to potentially use for a tax savings. So if I'm a W-2 employee that's married and we have some real estate, and there's also some business ventures. Okay, I've got quite a few things here in my hand that I may be able to leverage that are going to get me back to purpose, back to that financial plan, and I might not need to add anything else. Does this make sense why we have to start with the financial plan as opposed to the tax plan? So once we have a lay of the land, once we understand our baseline, what is our estimated tax due for this year? What do we have available? Then you're going to start assessing what are the levers that I can pull. So step one was to identify your financial plan or your purpose plan. Step two is to now determine your baseline. Where am I starting from in terms of what do I have available, but also what is my estimated tax bill? So we need to have these qualitative and quantitative values. The next thing that we're going to do, the next step that we're going to take is identify the actual tax problem. Now you may be watching this video and you're saying, Lauren, I have no clue what my actual tax problems are. I get it. That's why you work with your CPA to help you address these things. But again, we are trying to get you to the place where you're just starting to understand for yourself so that you can have more productive conversations with your tax professional. You don't have to identify it and say, oh, I'm over leveraged or I'm under leveraged or anything like that. You can say, hey, I have real estate and I don't think I'm using it properly. I have a business and I don't think I'm using that to my advantage when it comes to taxes. Is there anything else that I can do at my W-2 job to lower my tax bill? All of those questions are going to start leading you to where are the potential problem spots in your tax approach. That's all that we're doing at this stage. We're not trying to get deep. We're not trying to become master tax professionals. That's not what we're doing. We're just simply starting to identify and ask questions to reveal areas that may have opportunity. Now, once you have the purpose plan and then you have your baseline and then we have these questions, now you can either divert directly to your tax preparer, your tax professional, your CPA to get these questions answered. Or if you're a DIYer, you can now head to the internet and start looking at getting yourself familiar with some terminology. If you are a real estate professional or you invest in real estate and your question is, how can I utilize real estate to my advantage from a tax perspective? You will find a plethora of information, not just on my channel, on a whole bunch of other channels. You'll find it on social media. You can start taking in some of that information. You can even ask ChatGPT, right, to start laying out some things. From there, you now get some ideas. You get some language around what is possible. So we started with the question of what am I trying to accomplish with my life? What do I feel called to do? We've identified that. Then we layer on, okay, so taxes, I understand that taxes are a part of the process to get me to purpose. So what do I need to do now in order to manage them in a way that is moving me closer to my goals. So we established that. Now we have established our baseline. Where are we right now? If nothing changed, where would we end up? Then we've layered on questions. And now we're taking those questions and starting to identify potential solutions. Potential solutions. We're not saying it's for sure, it's potential solutions. So once we've gotten this list of solutions, I want to introduce you to a framework that I call the 3 C's. The 3 C's are the way in which I evaluate solutions for clients. It stands for complexity, category, and capital. Number 1, complexity. Do I understand this? Can I explain this to somebody? And that somebody could be my spouse. Would they understand what I'm saying to them? Category. Is this something that is only a tax deduction, or it's going to give me a return on investment? And number 3, is there a capital outlay? Do I have to spend money to make this happen? So let me give you an example. I'll throw out some strategies so that we can kind of walk through this. Oil and gas. There is something available in the marketplace. It's an alternative investment, and you can invest in oil and gas for a tax deduction. Now let's take it through the 3 C's. Is it complex? Yes. Unless you take the time to really understand the mechanics of how an oil and gas deal works, you're probably going to be confused by it. 2, we'll call it C2, category. It is a ROI tax strategy. So when you invest in oil and gas, you usually get some money back, plus the original capital that you put into the strategy. C3, is there capital? I gave that away in C2, but you have to put money into it in order to be able to take advantage of it, because it is an investment. It is not just a tax deduction. So that's how we would look at it. Let me give you another example. I call this it's the Augusta rule, right? So if you want to rent out your primary residence to your business, you can get a deduction for that. So it is an expense for the business, and if it's 14 days or less, you do not have to report that income on your personal return. So how does that work? Again, going through the 3 C's. 1, what is the complexity? Very simple. Most people understand I have a primary residence. I'm going to rent out some space to my business. The business has got to pay me. That's number 1. Number 2, category. Is it an ROI or is it a deduction? This is a deduction. There is no return on investment or anything like that when it comes to the Augusta rule. And number 3, C3, is capital. Do I have to invest capital? Not really. You have to pay yourself personally market rate for the rental of your space. But again, it's not going to be particularly much, and that's going from, you're taking it essentially out of your right pocket and putting it in your left. So we can call it essentially net zero, but that is another strategy. So that is how we are going to look at the strategies. And if you get hung up on complexity, any one of these may be a stopper for you. So if you don't understand how it works, it may not be a good option for you. Now you could say, I don't really understand how it works. I think I like this though. I want to invest the time. That's no problem. But again, the 3 C's is just a way for you to think through and evaluate a strategy for yourself to see if it makes sense. But again, we've already done all of the legwork to make sure that the strategies that we're picking and the things that we're addressing actually make sense for that financial plan that we identified at the very beginning. So once we have identified strategies, identified our actual tax problem and our tax bill, gotten clear on our financial plan and what is the purpose that we're trying to achieve, now it's time to put this all together. Now, for a lot of you, this may be where you stop. You say, you know what? I've done a lot of the legwork. I'm going to take this to my accountant. This is the perfect time to do this because you've now done a lot of assessment. And you can have real meaningful conversation with your tax professional based on what you've already done. But if you are a go-getter and you want to do it on your own, this is the point in time where we now take all of the strategies and we understand what is the timing. When do we have to do this? So for example, retirement has specific timelines and deadlines for when you have to set up solo or 401ks or SEP IRAs. So we want to make sure that we are clear on that. And so at this point, it's just about sequencing. What has to come first, next, and when do these things need to be completed by? Now for a lot of folks, once they've gotten the tax savings, they got the strategy in place, they can wipe their hands and say, good job, we've done what we were supposed to do. We'll file the tax return and everything should be okay. However, from my perspective, that is an incomplete tax plan. We are not just saving money on taxes for the sake of saving. We should be using that money to put it elsewhere into our financial life. Therefore, the next step is then to take the savings. We're going to obviously monitor, make sure things are going well, and once it comes time to file the return, any savings that is generated from the tax plan should now be rerouted to accomplish and further move forward our financial plan that we came up with before we even started all of it. Do you understand why that financial plan, that purpose plan is so important? We cannot make any decisions that really make sense without that in place. And so there you have it. That is, if you can understand how all of this works together, you are 90% of the way there when it comes to taking control of your finances from a tax perspective. In short, I want you to understand that the best plans are never about the savings anyway. It's about what are you trying to accomplish? And if you can get clarity on what actually is supposed to be happening, what you were called to do, what you were called to create, everything else will fall into place. If you want to learn more, click this video here.